Here are the crypto top headlines covered in this video. $1.3 trillion in tokenized real-world assets by 2030, more likely than $30 trillion, says Analyst. Next, SEC says NFTs are securities in new Wells notice against OpenSea, according to CEO. Also, Avalanche president John Wu, very positive on Ethereum ETFs. Here's why. Welcome to Crypto Top Headlines, where there's no clickbait thumbnails or titles, and no speeches on my opinions, just bringing crypto's news to you. I would greatly appreciate it if you would click on the like and subscribe buttons, as well as the notification bell. It does help support the channel, so thank you in advance for doing so. Now, on to these headlines. Our first top headline, $1.3 trillion in tokenized real-world assets by 2030, more likely than $30 trillion, says Analyst. One analyst says a Wall Street forecast may be overestimating the amount of money that could flow into tokenized real-world assets by 2030. A crypto analyst is skeptical of a bullish prediction that tokenized real-world assets, or RWAs, could be worth $30 trillion by 2030, suggesting that 5% of that amount is a more realistic target. If the current 2-year CAGR, or compound annual growth rate, of 121% continues, we could see around $1.3 trillion in tokenized traditional assets by 2030, Real Vision chief crypto analyst Jamie Coates said in an August 27th X post. The tokenization of assets is the process of issuing security tokens, a type of blockchain token, representing real digital tradable assets. These tokens represent anything from real estate and bonds to art and stocks. In June, Standard Chartered Bank and Synpulse forecasted that tokenized RWAs could reach $30.1 trillion by 2034. While Coates thinks Wall Street's prediction is overly optimistic, even his more conservative estimate could significantly impact the Web3 ecosystem if it pans out the way he thinks. He believes that if $1.3 trillion were in real-world assets on-chain, it would create a massive flywheel effect on other parts of the crypto ecosystem, such as non-fungible tokens or NFTs, social platforms, and gaming. What does it mean for Ethereum? But the value accrual on Ethereum, the preferred platform for early TradFi asset issuers, would be hard to calculate, he argued. This is due to the amount of market share Layer 2 networks will capture compared to the value captured by the base Ethereum network itself. L2s might capture 95 to 99% of the revenue, with the remainder paid to ETH as settlement costs, he noted, saying that L2s are unlikely to give up their cash cow and allow ETH to scale the L1. If ETH scales the L1, it would capture much more of the opportunity. This sums up what I call the Ethereum dilemma right now. In June, consulting firm McKinsey & Company said tokenized financial assets have had a cold start, but they are on track to reach a market size of about $2 trillion by 2030. The McKinsey & Company analysts added that tokenization needs a use case that offers a benefit over traditional finance systems. One such example is the tokenization of bonds. Barely a week goes by without the announcement of a new tokenized bond issuance. Meanwhile, in April, RippleX Senior Vice President Marcus Ingpenger told Cointelegraph that research estimates the future value of tokenized markets to be $16 trillion, approximately 8 times bigger than the total market capitalization of the entire cryptocurrency sector. Let me pause here for a moment. If you're getting value out of this video, please click on the like and subscribe buttons as well as the notification bell. Our next top headline, SEC says NFTs are securities in new Wells notice against OpenSea, according to CEO. The U.S. Securities and Exchange Commission has sent a Wells notice to non-fungible token marketplace OpenSea, according to the firm's CEO. Devin Fenzer says in a new post on the social media platform X that the company has received a Wells notice from the SEC warning them of possible securities law violations. A Wells notice is a warning issued by the SEC that it's planning to pursue legal action against a company and is not an indication of wrongdoing. Says Finzer, OpenSea has received a Wells notice from the SEC threatening to sue us because they believe NFTs on our platform are securities. We're shocked the SEC would make such a sweeping move against creators and artists, but we're ready to stand up and fight. Cryptocurrencies have long been in the crosshairs of the SEC, and companies like Coinbase, Uniswap, Robinhood, Kraken, and Consensus have been fighting against the SEC's single-track approach of regulation by enforcement. But this is a move into uncharted territory. By targeting NFTs, the SEC would stifle innovation on an even broader scale. Hundreds of thousands of online artists and creatives are at risk, and many do not have the resources to defend themselves. Finzer is promising that OpenSea will defend itself against the SEC as well as put up $5 million to cover legal fees of NFT artists who may also receive a similar Wells notice. In addition to standing our own ground, we're pledging $5 million to help cover legal fees for NFT creators and devs that receive a Wells notice. Every creator, big or small, should be able to innovate without fear. I hope the SEC will come to its senses sooner rather than later, and that they'll listen with an open mind. Until then, we'll stand up and fight for our industry. Our next top headline, Avalanche President John Wu, very positive on Ethereum ETFs. Here's why. The president of Avalanche, the team behind Layer 1 blockchain Avalanche, or AVAX, says that he's optimistic about Ethereum-based exchange-traded funds. In a new interview with Bloomberg Television, Avalanche president John Wu says that over time, Ethereum ETFs will find success due to the competitive nature of the decentralized finance, or DeFi, sector. I don't think anyone anticipated the Ethereum ETF to be as successful as the Bitcoin ETF was, but in reality, Bitcoin really has just one competitor, that's gold. Ethereum is about utility and creating use cases. They actually have many competitors, from Avalanche to Solana to a whole bunch of others, and so you have a situation where the supply, because it's an earned proof of stake model, is increasing and yet transactions are just kind of steady. So there's a little bit of imbalance, but I'm very positive that over time it is still in a pull position and has a chance to allow others to get into the space. Yu goes on to highlight the macroeconomic trends that lead him to be very positive toward the future of the digital assets industry. What I care about is that you see more adoption, and this space really has three components that drive it. One is the macro level. Every central bank is lowering rates. The fact that there is an ETF for Ethereum and Bitcoin will create more access, so that's ultimately positive. Morgan Stanley is going to let their RIAs, or Registered Investment Advisors, now sell the Bitcoin ETF, so that's definitely a positive. And I think what people don't realize is the adoption on network in this space is actually growing a lot. If you look at wallets, look at addresses, it's there. So I'm very positive going forward. ETH-based ETFs, which give investors exposure to ETH without the need to directly purchase the asset, were approved earlier this year by the U.S. Securities and Exchange Commission. Ethereum is trading for $2,468 at time of writing, a 3.3% decrease during the last 24 hours. So this concludes Crypto Top Headlines. If you haven't already done so, don't forget to click on the like and subscribe buttons as well as the notification bell. Also, leave your thoughts in the comments and share this video with your friends and family. Thank you all for watching Crypto Top Headlines, bringing crypto's news to you.